Good evening, everybody. This is Ask Mitch Anything. It is Tuesday, November 3rd. Hello, hello. Thank you for joining all of us. Eugene, Dan, Hannah, Jen, Ronald, thank you for being here tonight. People will be trickling in. Today's topic is literally Ask Mitch Anything. We've had lots of guest speakers in the past, but today we're going to just have questions rolling in. We can discuss things. We can discuss our deals, discuss our concerns and our fears, and whatever else comes to mind. So let's get this party started.
Yeah, welcome everybody. Thank you, Tyson. That was an awesome introduction. So this week I wanted to open it up to questions, just a few little things that we've been working on, and maybe this will become a topic of conversation. I don't know. But one thing I'm really excited about this week, we did a house tour recently on this call of a fourplex that I own in Clearfield, Utah. If you remember, it was the one that had the triplex in the back and the single family property up front. Really unique deal, and it's so awesome. I mean, I teach this today. I taught a seminar to real estate agents. I was teaching this same strategy to real estate agents. But about 6 months ago, Maley found a property that was for sale. That was that single family with the triplex in back. They were offering seller financing, and it was $215,000 down. $215,000 total acquisition of 700,000. Excuse me, 600,000. Normally that would be one of that, those types of deals come across my desk all day long. 215,000 is, for a long term, it's really hard to raise that kind of money. I like to use other people's money as often as I can. So normally that's one that I'd say, pass, right? Just, it's too rich. There's too much money for the down payment that they want. However, when Maley was explaining this one to me, she said it's a triplex in the back, it's a single family up front, they want 215 down. I said, pass. Wait a second. Let's check. Are the triplex and the single family house up front, are they separate tax IDs? So she pulls it up on the MLS. Sure enough, they're separate tax IDs. So I said, okay, I want it. Let's do this. So I went out to a good friend of mine, who happens to be a hard money lender. I said, look, I don't want your hard money right now. What I want is you to come in as equity. And here's how it's going to work. You're going to put in $215,000 to acquire this house. The tenant has like 4 or 5 months left in his lease. As soon as he's out, we're going to sell the house. We think we can sell it for $235,000, and you'll get to keep all the proceeds from that house. I get to keep the free and clear, well, not free and clear, but seller finance, $0 down, triplex in the back, right? Which at that point, because minus 215, so we're at from 600,000, we're at 385,000 bucks, right? So for $385,000, I get this triplex that's worth almost $500,000. And it's completely seller finance. Amazing deal, right? So, tenant's out now. Tenant was out end of October, and we go to list it, and we pull the comps again on the house. Well, instead of being worth 235, it's worth 255. So not only am I going to be able to give my guy the 235 that I promised him, I'm going to be able to pocket 20 grand and get a 100% seller financed triplex that now, because of what the market's doing, is worth $700,000. And I get that for $385,000 seller finance. So amazing strategy. I mean, these types of deals, these aren't deals that happen every day, right? I mean, this specific type of deal has happened once in my career. But these are the types of things we need to be ready for, right? Because the unicorns, the once in a career type deals, those happen all the time in different forms, right? You're going to have a once in a career type deal like this, just exactly the same way that I just explained, but you're going to have other unicorns that happen as well, and you need to be prepared for them. So these are the types of deals that you should have your eye out for. Always get creative with the deals that you're looking at. As you're looking at deals, learn to look at it from many different perspectives. Not just, hey, how can I buy this cash and do a fix and flip on it? Because not every deal is going to be a cash fix and flip. This is why our education is so eclectic, right? Why we teach you so many different strategies is so that you have all those tools in your belt, so that when you look at a property, you can say, hey, this doesn't work as a flip. It doesn't work as a traditional rental. It might work as an Airbnb, or it might work as a seller finance rental, or it might work as this, or it might work as that, right? You want to be able to look at it through as many lenses as possible before you say pass. So I just want to share that success with you guys for the week. We're listing it this week for $255,000, and then we'll have that private money down payment paid back, and we'll be able to go out and have that triplex basically pay for itself with the tenants, right? So pretty awesome. And now we've got an incredible amount of equity. We're almost at 50% equity on it because of the appreciation that's happened. And, we can leverage it and buy other deals and all sorts of stuff. So some really amazing things that are happening out there. I'm always excited to share with you guys creative things that are happening like that, because it sparks the mind, right? And you may file that away, and then 2 years from now, you come across a similar deal and you're like, wait, Mitch told me about this. This is totally something I can do on this property. So file that away, right? File it away, and hopefully you can use it in the future. Anyway, so I'm interested in knowing what's going on with you guys. What types of things are we facing? For some people, I know it's, life's taking over and it's hard to get out and generate leads. For other people, it's, say, I'm facing an incredible amount of rejection, or maybe it's, I can't get anybody to accept my offers. Can't find money, whatever the case might be. Let's talk about it. I want this to be, every other week we have a guest speaker, and the off weeks it's you and me, and I want to make these calls about you. So let's talk about what's going on in your lives. Feel free to come off mute and let's chat. Tell me about what's going on.
I do have a question about that front house, Mitch.
Yeah.
Without seeing the pictures after the tenant moves out, which is happening very soon for everyone else on the call, do you think it will be worth it to put money into it, like with new paint, new carpet, and then reappraise and then list, or just list it?
That's always
and I also just want to ask, so if you don't do anything with that property, is it a good enough state not to impact the value of your properties behind that you're interested in?
Yeah. So obviously, I'll answer both questions. So obviously, Eugene, when I sell that front property, the package is worth less, right?
Right.
But the unique part about this is I can get my partner out of it. So now it's just me that owns that triplex, and nobody else is a part of that. I get to collect 100% of the cash flow. So that's the real benefit, and that's the goal that I'm trying to accomplish on this deal. And you know what? Every deal, your goals are going to be different. Because every month things change, right? Some months are great. And hey, I just want a rental add to the portfolio. And next month is like, things are tight. I need a flip or a wholesale so I can make some money, right? So every deal is going to be different. In this case, this is just that strategy meets what our goals are. And
Okay.
it's going to put money in our pocket, and it's going to be something that we can add to the portfolio, and potentially something that we could leverage in the near future. So yes, it is going to affect the value. Obviously, we're getting rid of that house, but we've experienced an incredible amount of appreciation in that area, to where that triplex now is worth more by itself than what we paid for the entire package together. So definitely a unique, timing. It worked in our favor in this case, right? The appreciation that we've been experiencing worked in our favor. But it's just what works right now in the moment. So yeah, it will definitely affect it. It's not going to be worth as much, but that's okay, because it's meeting our other goals, right? And then Tyson, putting money into it. So this is a good question. I actually have another property in Rose Park that I bought for $213,000, and I'm just going to turn around and put it right back on the market for $255,000. The only thing I'm going to do to it is, it originally was a 3-bedroom. Somebody tore down a wall and made it a 2-bedroom. I'm putting the wall back up, not putting any electrical in. It's going to cost me $1,000 for framing, sheetrock, mud, and paint. And then I'm going to put it back on the market. That's it. So I ran the analysis, and I looked at, okay, if I put 20 grand into this, what's it going to get me? And the fact of the matter is, I make more money by just turning around and relisting it than I do if I rehab it and relist it for the ARV. Obviously less risk, right? So I can turn around, it's a faster timeline. So the answer, Tyson, to your question is, it comes down to the numbers. Run the numbers in both scenarios. Over here, how much money are we going to make versus the time we're going to spend? Over here, how much money are we going to make versus the time we're going to spend? Pick the better one. That's the formula, right? Just run the math. There's not a blanket. Every deal is so unique. Every project is so unique. You have to run the numbers on everything. There's not a blanket like, oh, just do flips on everything right now, or just do quick flips, which is just buying it and reselling it real quick. do quick flips on every. There's not a blanket. It's just you got to run the numbers and pick the better strategy, right? Now, I will say, Tyson, you're going to be up there checking it out for me tomorrow when David moves out. So, did he destroy the property on his way out?
That's what I'm wondering.
I don't know, right? Like, we don't know. We're going to have to find out. So, that may also play into the level of remodel that I do. If I've got to go in and patch holes in the wall and fix windows that he broke, and if that's money I'm going to be investing anyway, then I'm going to look a lot more seriously at putting even more money into it, and maybe getting it up to like a $290,000 or a $300,000 price point versus if he moves out and I just have the carpets cleaned and then list it, right, which is going to be $200. So it really just depends on the level of fixing that we need to do after he moves out.
Yeah. Now, an idea I have, the old, and this is kind of like, I guess, education for everyone on the call. When pictures are taken for your properties, for the listing, if you're taken by your phone, by a non-professional, or with a good camera by a non-professional, they can lower the end sale price because people, their first impression on the MLS is not very high of that property. And this property only has pictures on the MLS of when David is living in it. So it has clutter everywhere. So maybe getting pictures after he moves out will at least raise the ARV. What do you think, Mitch?
Yeah, have you guys seen The Greatest Showman? I love that movie. Hugh Jackman's my favorite actor.
I love that movie too.
So I think, the story of P.T. Barnum, that guy sold, a show, really, is what he sold. It's called The Greatest Showman for a reason. Showmanship is what sells. So it doesn't matter how good a remodel you do. If you're not doing a good job of showcasing what you've done, then you're not going to get any attraction, and it's going to lower, the quality, and it's going to lower all of those, all of the things that you spent money on and spent time on during the process. So having good pictures, staging, those types of things, those are the showmanship. That's what sells the property, right? You could have an absolute lemon. I mean, that house down in Cedar Hills is a great example, right? I was so displeased with the quality that I got out of the contractor. But we were stuck. We had already spent the budget. And so I went out and got the best stager I could find to come in and do an amazing job staging the property so that we could sell it. We ended up getting an offer $22,000 higher than our asking price. Blows my mind, right? I disappointed in the quality of the fix and flip, but we ended up with, with an offer $22,000 higher because of our showmanship. The quality of the pictures that we took, the quality of the staging that we did. So
plus a backup offer just as high, and 12 disappointed buyers who wanted to buy this property also. It worked.
Exactly. Yep. So that's a huge part of it. Unfortunately, that for better or for worse, it's a big part of selling a property is how you showcase it. Absolutely. That's a good point, Tyson. Thank you for bringing that up.
You're welcome. Probably be reaching out to Garrett so we can go up there and take pictures once I see it.
Yeah, absolutely. So let's keep talking. What else is on your mind?
I want to know how Tyson has 2 Zoom slots going.
Oh, I'll tell you the story.
He paid for his education twice.
Well, I am hosting this from the Knowledge Source's Zoom account, and so that's Knowledge Source, the host. And I just filled out my mail-in ballot. It's right here. And I have 1.5 more hours to go deliver it to a voting place before they won't accept it anymore. So sometime during this call, I'm going to, I already added my phone as a co-host. So I'm going to turn off my camera on my computer and take my hosting phone to the polling place with me so I can still participate in the call, but still vote.
There you go. There is the answer. And
I saw your ballot,
Yeah,
Tyson, when you lifted it up. Did you really write in Tiger King for president?
I wrote Jesus, actually.
Okay. Nice.
Or, no, wait. Russell M. Nelson. That's who I
Nice.
voted for.
I love it. So, I think that's a really good topic, actually, because I've been hearing from a lot of people concerned about the results of the election.
Oh, yeah.
Now, obviously, how does that affect real estate? I don't want to get political with anything, but let's have a conversation about it. This isn't an opportunity to campaign for anybody or to rally for anybody. But and let's be respectful of each other's opinions. But let's talk about some of the concerns that we have as we start looking at the different candidates. And what if they win? Right? What happens if Joe Biden wins? What does the market look like? What's expected to change? What happens if Donald Trump wins again? What can we expect to happen to the real estate market, and what's expected to change? So, are there concerns around the election that you guys have when it comes to real estate investing? Are they preventing you from going out and taking certain steps that we know we need to be taking? Let's start a dialogue about this. What are some of the concerns that you guys have?
First of all, I will say that I'm not very political at all. I don't know much about it. And when I do try to learn more about politics, I'm just seeking the truth, like absolute truth, not relative truth, because I believe that truth is absolute and not relative to other things. But so it's difficult for me to know what is truth and what is lies, what's biased, what's not biased. I just want an unbiased truth. So that's what I seek for. And if policies that a president is going to pass is going to make it harder to be a successful small business owner, harder to be successful in real estate, harder to legally pay less taxes, then that would make it hard for me to like that person. So I can say that.
Okay. So I think that's a really good perspective, Tyson. So let's talk about some absolute truths about the election for a second. Regardless of which candidate gets elected, do people still need a place to live? Yes or no?
Place the what?
A place to live.
A place to live. Absolutely,
Yeah.
They need a place to live. Yes.
Yeah.
It's a basic human need.
If Donald Trump wins, we're not all going to be homeless tomorrow. If Joe Biden wins, we're not all going to be homeless tomorrow. We still get to keep our houses. Great news, right? We get to keep our houses. We get to keep our leases in place. It doesn't really make a difference. The demand for real estate is still going to be there. So I think we're made to believe, and whether this is through the media or whether this is through the radicalism in each party, kind of bolstering the fear mongering of, if so and so wins, he's going to take away our right to have a house or whatever the case might be. That's not the case. No, that's not going to happen. We're still life will go on. We'll wake up on Thursday or Friday or whatever the day after the election is, and guess what? It'll be the same. We'll go to work, we'll breathe air, we'll eat food, like all the things, we'll wear clothes, like all the things will be the same, right? So take it from here and let's bring that fear down to here, and let's talk about, okay, what are some of the minor changes that can happen if one person gets elected over the other person? Because the major things that everybody's scared about, not going to change, right? So, one of the things, I actually live in a red state. I live in Utah, right? Utah is notoriously a red state, tends to vote Republican every time. And one thing that I'm noticing, Republicans have and guys, this is open for discussion. All I ask is let's be respectful of everybody's opinion. If you disagree with what I'm saying, I would love to hear your take on it. Let's have a conversation about it. Let's just be respectful of each other, right? But one of the things that I think is going to play out regardless in my state, regardless of who wins. Let's look at both sides. So Donald Trump wins, right? Republican. I'm in a Republican state. Republicans tend to be a little more fiscally conservative. They're notorious for that, right? They tend to, cut spending and and kind of go after giving tax benefits to people like myself, right? Make a lot of money, you create a lot of jobs, create a lot of housing. That's just kind of historically what happens. So I think in the long term, another Trump 4 years is going to be a positive thing for me. However, in the short term, let me talk to you about what's going on in my state right now. Utah's a very conservative state, relatively low taxes, great place to do business, a lot of incentives for small business owners, medium business owners, and even big businesses are coming here, like Facebook and Adobe, and just to name a few. Amazon just built a huge fulfillment center here. We're seeing a lot of growth in Utah, and a lot of that growth is coming from places where it's expensive to live, places like California. Right now, let's talk about California for a second. California is a blue state. They offer a lot more social aid than my state, for example. There's a lot more. I want to be sensitive. I don't want to. I don't want to try to take any side here, and I'm kind of apolitical, so I don't want to offend anybody. But there tends to be a higher cost of living in blue states. Right? If you look at data, pure data, there tends to be a higher cost of living in blue states simply because there tends to be more social programs in blue states, which is fine. That's what Democrats tend to want. So, but what ends up happening is when you have a vacuum, when you've got an area of the country where it's cheaper to do business than other areas of the country, well, eventually that vacuum is going to get filled by something, and then you see companies like Adobe and companies like Facebook jump ship on states like Washington and California when it kind of gets out of control, and they want to move to places where it's a little better to do business. So that's what you tend to see. I think that another Trump presidency is going to slow that down a little bit because of the nature of conservatism. That's going to slow that down, and those businesses are going to tend to stay where they're at. They're going to stay put because they're not going to incur the costs of moving their entire business to a different state. I think if you see a Democrat president, in this case Joe Biden, you're going to see some of those social programs that provide help to the less fortunate. Those cost money, and that comes from the taxpayers. It's going to compound the problem, and you're going to see people moving more to the red states. So actually, a Joe Biden presidency in the short term in 2021 is going to help Mitch out. Right? Like, I'm excited because I live in a red state where we're going to get lots of people moving in, and I'm going to sell lots of real estate, and that's going to be awesome. A Trump presidency, I don't think is going to help me as much in 2021, but it's going to help me probably over the next 4 years or so. That's kind of what I'm looking at. And so, a long-term win or a short-term win, I'm looking at like, hey, if Biden wins, it's like a fix and flip. I get a short-term win. If Trump wins, it's like a rental. I get a long-term win. I'm okay with either one. Right? I mean, it's kind of whatever's. Obviously, there's people I'm sure on the call that are way more political than I am, and are a lot more passionate about the results and outcome of the election than I am, and for other reasons beyond financial reasons. So that's what I want to open up to discussion. What are some of the concerns that you guys have about the election, and let's address those. Or thoughts or commentary or anything. Participate, please. I want to hear what Dan has to say. Oh, wait, Hannah, you were coming out. Go ahead.
Hannah and Dan.
And then Dan.
I was just gonna say that I'm kind of like Tyson, it's just give me the truth, just give me some facts, and then I'm more business minded too, because this is my values, this is things, and so and like you said, tomorrow I'm gonna wake up and it's not gonna be any different than
Right.
it was today, and it's probably not gonna be any different in January than it was today, as far as how my life plays out, because it really ends up to in each of us anyway. We have to deal with both. And I had somebody tell me they were Asian and they immigrated here during the war, and she played it out. She's like, I want balance. And that's all she cared about. And it made a lot of sense to me, because she goes, I'm not for this party or that party. She goes, I just want to see balance, because I grew up in the Philippines. We didn't have any freedoms. And I want to make sure we have balance.
Isn't it great to know that we live in a country where no matter what happens, we're going to wake up the next day and be able to go back to work and come home to our
Yeah.
homes and
Yeah.
be surrounded by the love of our families. And that's such a cool thing for me. In this election, I'm just all about America. Let's go America, right? But yeah, that's so true, Hannah. I think the it comes back to what I talk about when we talk about some in the education, when I talk about market climates. It's not about when is a good time to invest in real estate. It's always a good time. It's just understanding, and in this case where we're talking about an election, it's understanding the candidate and understanding the impact that that's going to have on the economy. I think as a general, we're talking very broad brush here. If Democrats win, we're going to see more social programs, and that's going to help out a lot of people who are struggling, and that's awesome, right? That's an amazing thing. Now that money's going to have to come from somewhere, and that's going to be a result of it. Now, on the other side, with conservatism, we're going to see, and Republicans, we're going to see a shift the other way. We're going to see, benefits to business owners, benefits to real estate investors, and it's just simply a matter of understanding how to react to that. If people are going to start getting, for example, if people are going to start getting help to go pay their rent, well, guess what? That means it's a great time for us to buy rentals, because if people are going to get, people on the low end of the income spectrum are going to start getting help from the government. I couldn't ask for a better tenant than the government. They pay their bills, right? So time to go get rentals, right? But if there's going to be tax incentives for business owners that are making short-term income, well, I'm going to go start doing more flips. And it's just a matter of understanding what the market's going to do and how it's going to respond to the respective candidate. But as far as being an investor, I don't really think that there's a wrong answer here. I think we just react to whatever happens, right? And that's part of it. Again, coronavirus, we just reacted to what it did to the market. 2008, we just reacted to what it did to the market, right? We watched the market, we try to extrapolate what's going to happen. We watch the trends, and then we follow the trends, and we do the thing that's going to make money. And that's really the key. Your education is going to equip you for whatever result happens. So it's a good thing no matter what.
Mitch, why do you think that right now some of the, like in our market, the houses, there's a very low inventory, houses are going for a lot of money? It just seems odd given the circumstances of people being out of work, and it just seems like an odd circumstance. And is that happening everywhere, or what's your perception of why that's going on?
People have to be coming from somewhere, right? So there's got to be a place that house inventory is going up, not down.
Yeah. Now, Charlotte, educate me on the politics of New Mexico. New Mexico is a swing state.
We're Democrat run primarily. We have a low cost of living, great weather, high crime, low education, poor education. So, we're close enough. I've heard that people are kind of flocking out of California, given COVID, that they have more mobility in their work environment. So they don't have to live in some place that's really expensive. But, on the high end, my sister is a high end home buyer. They're buying a second home in Arizona. Yeah. But she said everything in Scottsdale is going like that in the high end because of people coming from California. Right. And they're buying everything up. But I just don't get it here. We're considered a poor state, and our house prices are going up because our inventory is so low, and things are selling within a week. Mostly they're selling very fast, but I don't get it. We have a state that's pretty much closed. Our governor's probably going to close us again, in the next week or two, because our COVID numbers are going up. So we've been very limited, and I just don't get it, because from everything you can gather, people are not working, they're losing their jobs, they don't have, they have more limited income, but yet our housing market's going crazy.
Yeah. Well, so a couple of things. First of all, law of supply and demand, right? Your house prices are going up, and we're seeing the same thing here in Utah. I mean, I think it's across the Mountain West actually, and in other areas of the country. I think the Midwest is experiencing this as well. There's a vacuum being created. And supply and demand, because inventory is so low, people are offering more. It goes back to this, I shared, I think last week, this house that we put on the market for $455, and we got $480 for it. And it's a piece of crap. It's like, I'm not proud of it. It's one of the worst houses I've ever done. The quality was terrible. We tried out a contract, it didn't work. But the reason we're seeing that is because the market's so low. I mean, people see something come on the market in the area they want to live in, and they jump on it, and they're willing to offer, way more than they would otherwise. So supply and demand is what's driving.
Do you guys have a positive migration in Utah? Because in New Mexico, we're having more people leave than come to New Mexico. So I just don't even know where the buyers are coming from.
I was reading, because I get mail from Mitch and Maley, I was reading this magazine like a week ago, and it was just giving reports and data on who's buying the houses, who's moving into Utah, where people are coming from. Most of them are coming from California, and it's happening very fast.
We're seeing a lot of out-of-state influx, and it's because of cost of living. Now, Utah is not a cheap place to live, but it's also not the most expensive place to live. I think Utah's done a great job of creating a climate where, that there's a good balance between the cost of living and the opportunity that's available to business owners and other things. So, here's the thing, Charlotte, with supply and demand, it's a leapfrog effect. So even if your demand is sinking, if your supply is lower than your demand, you still have a vacuum, right? So if not a lot of people are listing their homes and the demand is technically kind of low, it still creates this space where there's more demand than there is supply, and that can cause a raise in prices. So that's something to consider. Now, I think you answered your own question when you said, hey, it's a cheap place to live, we're considered a poor state. Coronavirus has created mobility. It's created this idea that we don't have to. I mean, I myself canceled a lease on an office that I had because I wasn't using it anymore during this pandemic. So, working from home is becoming a new thing that I don't think is going to go away. Even if the pandemic subsides a little bit, I don't think the working from home thing is going to go away. That's become a very popular thing, both for employees who enjoy the flexibility and for businesses who enjoy the lower overhead, right? So it is going to create more mobility in the country, and you're going to see an influx of people moving to states where the cost of living is lower. In my opinion, that's what's driving that influx. Now, in response to, we have our growth rate is negative, right? Again, it's even though the demand might be somewhat low, the supply is still lower. So all that means is you've got fewer people moving out, fewer people listing their homes for sale at this moment than actually want to buy homes. Even, maybe it was like this and this is shrinking. It may get to a point where, demand drops below supply, and then you've got a buyer's market, right? And that's when it shifts, and it's going to be more advantageous to be a buyer than it is to be a seller. But at this moment, that's all it means, is the supply is lower than the demand, even if the demand numbers are going down. Does that make sense? Does that create any follow-up questions, or are we good?
I was just curious if it was the same in Utah or anywhere else, if everybody, because of the COVID phenomena of people working at home and being mobile.
It totally is. And I think in Utah, we're experiencing something a little different. Utah has a very aggressive attitude, especially towards certain industries. The film industry, Utah hosts the Sundance Film Festival in Park City every year. They're very aggressive towards film. Some films that we all love, the classics. Dumb and Dumber was filmed here. I mean, High School Musical. Disney films a lot of things here. The Salt Flats out by the Great Salt Lake are a very popular place for movies to be filmed. And the reason is because we don't charge them taxes if they come film their movies here, right? We want the exposure. That's Utah's attitude. At least the legislature's attitude is, hey, let's give a tax cut to people who are willing to come film movies here because we want the exposure, we want the growth. So, the film industry is sought after. They've done the same thing for the tech industry. Anybody who's moving to Utah is going to get an incredible amount of tax breaks if they're in the tech industry. So we're seeing a huge influx of that. They're calling the movement Silicon Slopes, because you see people moving from Silicon Valley to Silicon Slopes, which is along the Wasatch Front here. The tax incentives are encouraging people to move here, and what's happening is the cost of living is just going up in places like California, along the West Coast. We're even seeing people from the East Coast moving over here. Cost of living is going up, cost of doing business is going up, and it tends to be, and if there's a different opinion, I'm happy to hear it, but it tends to be that the blue states tend to be a little more regulatory on businesses than the red states, right? So the red states are going to encourage business ownership, where the blue states are going to focus more on things like the employees and the tenants, where the red states focus a little more on the business owners and the landlords, right? So you've got this balance, and you just see that influx because of that. And I think that's what Utah's experiencing right now.
Currently in Utah, there is 3 buyers for every 1 house, like 3 seeking buyers for every available property, which means every time someone buys a property, there are 2 pissed off buyers that didn't get to buy a property. So they go and try harder, and they get frustrated, and then they pay more. So that's kind of another thing that's driving house prices up here in Utah.
Dan the man, I'm curious to get your opinion on this. This is something you and I talk often, but this isn't something that we've talked about. So I'd love to hear what your thoughts are on all this stuff.
I'm trying to stay a little neutral here. No, seriously, I liked the comment that Hannah had about her friend from the Philippines, and I agree with her, is that from a political point of view, you're just trying to have people that are helping to run the country. You don't want government to take over. That's not their job. But ultimately, whether it's, let's call it, Republican and more conservative to the right, or Democrat and a little bit more left, you're just trying to get him, whoever's running the show, not to go too crazy right or not to go too crazy left, right? You're just trying to say, okay, we're happy to steer the ship a little bit more that way, but let's keep that balance like Hannah talked about. And so, but ultimately, your major point is, no matter who goes in, things aren't going to all of a sudden go crazy tomorrow. That's the greatest thing about real estate, is that it's not like the stock market, right? Yeah. Where tomorrow it's either, I guess it went down, 700 points, and the next day it goes up, 600 points. You don't have that with real estate. It's a slow roller coaster, and you can see the crest, and it's going down, but it's slow, and you can ride the wave. And as you've already mentioned, you're either going to be working the side of fix and flips, or you're going to be working the side of rentals, and all the creative things in between to be able to handle the roller coaster, whichever way it's going. So, so it's all good.
Yeah, absolutely. It's all good. So don't.
You just reminded me of my favorite quote. Well, one of them, Dan. It's something like, you may not be able to control the storm, but you can learn to ride the waves.
Yeah.
Good. I like it.
Yeah. Yeah. And that, we've talked about before, the allegory of the surfer. Surfers know if you wipe out, the worst thing you can do is panic, right? So if this election doesn't go your way and you start panicking, you're going to drown, right? But if you relax and allow the wave to do its thing, then you can respond to it in a calm, collected way. And that's how we need to behave as investors. It's okay. Whatever happens, it's okay. we're going to react to it accordingly, right?
That's right. So Tyson, do you know where the election box is?
Yes, I'm leaving to go to it right now.
All right, good. Well, we want to hear the report and see if there's a lineup at the election box, what's the drama going on, and we want to make sure you get your vote in before 8 p.m. Mountain Time.
Yeah. How about this? Since we're talking about elections and real estate and stuff, I will share the moment with you guys with my phone.
There you
I'll
go.
come off mute and come mute and be like, hey, everybody, the deed is done.
The joy of living in America is you get to vote, in a democratic society. That's awesome. Good.
Yeah. Before I forget, Hannah made, you're making a comment, Hannah, about your friend in the Philippines. I really like that too. And that reminded me that I was thinking earlier today, why do I need to pick a side? Why do I need to pick a side? Why can't I just choose the truth, choose correct? It doesn't need to be sides. It just needs to be correct.
That's true, Tyson. The tricky thing, and Hannah's brought it up, you've brought it up. Everybody wants the truth. The problem is it's finding the truth in all the rhetoric and so on. It's hard to
And there's a lot of it.
Right?
Ronald's clapping. You can't hear him, but he's clapping.
And you can only choose one side for that truth.
Yeah.
But it's important to remember, real estate is 500 times older than this process we're going through right now. Mm-hmm. The Constitution was written in the 1780s, and you know what? Real estate has been around for 10,000 years, so it's not going anywhere. It's an older institution than what we're going through right now. And yes, politics can have a sway on what the real estate markets do, but it's not going anywhere. We're human beings. We need to live somewhere, and we need to work somewhere, and that's something that's not going to change. What will change is just how we go about making money doing it, right? So just staying on top of that. And you know what? Joining this class every week, I know it's a little bit smaller of a week. We've got 12 on the call this week, and I get it. It's election night. People are probably out voting, and that's good. They're doing their duty, right? But being a part of this call, we can have these conversations, and we can discuss what's going on. We can discuss policies if those are things that we're concerned about, political policies that are happening from whichever president gets elected tonight, and we can all kind of steer the ship together. So I think you guys are doing the best thing. I applaud you for being on the call. You guys are doing the best thing that you can possibly do right now in your real estate investing career, and that is stay connected to what's going on. Keep your finger on the pulse of what the market's doing, and and react accordingly. So I think there's some really good comments that have been made.
Mitch, I have a question about solar. Have you guys ever dealt with houses that have solar on it already? Have you ever put solar on anything? What does that do to value?
Yeah, so that is I've got a very complex answer for you, because just like any deal, solar can make or break it, right? I've got, for example, I'm working on a 13-unit complex right now. We're going to put solar on it, and we're going to convert all of the heating and cooling and everything to electric, and we're going to be the power company, and it's what makes the deal. If we didn't have that happening in this deal, it probably wouldn't be as sweet of a deal as it is. So solar is going to make that deal. Now, I can't tell you the number of fix and flips that I've passed on, because as I'm digging into, to the deal, I find out, hey, not only do I have to buy this house, but I got to take on a solar bill for the next 25 years that's going to ruin my cash flow and ruin my profitability on it. So, or rental as well, fix and flips and rentals. So, it just comes down to the numbers. It really does. Is solar going to be a positive, or is it going to be a negative in this case? And it goes both ways right now. Now, when we're talking multifamily, in a lot of cases, that's a positive thing, because you're the power company now and you could charge extra rent for it, right? But single family, it tends to be a little bit more difficult, at least, I would say, especially in Utah. And I do have to say, I'm a proponent of solar. I love the idea of clean energy. I love the idea of taking responsibility for the earth. I think that there's a very profitable approach to solar for me as a real estate investor. But the laws in Utah, because of the lobbyist institution, the laws in Utah are not favorable to solar, especially on residential properties. So it really hurts a lot of deals that we look at around here. Now, other states, I mean, Charlotte, you mentioned that New Mexico tends to be a blue state. And I hate that this issue is politicized, because here's the thing. I'm going to get a little personal for a second. Politically, I'd say I'm straight down the middle, right? I tend to be maybe a little more liberal on social issues, or maybe a little more conservative on financial and fiscal issues. Energy and taking care of the planet, it's been politicized, and I don't think it's something that should be. Why is that a political thing? Let's all take care. Let's all respect what we've been given here. We've been given a beautiful earth that gives us the ability to go out and do what we want to do, and that's real estate. Why shouldn't we want to take care of it? It shouldn't be a political issue, and that's frustrating to me sometimes. But blue states tend to favor clean energy a little bit more. So where it's oftentimes a negative thing for me in Utah, it could actually be more of a positive thing for you in New Mexico, just because of the political structure and the political climate there versus here, right? But it comes down to numbers on each and every deal. Just run the numbers on each deal. Make sure you're taking into account, is solar going to be a profit center, or is it going to be a liability for me?
Right. I mean, somebody was talking to my daughter about it for her house, and it was kind of the first thing that stuck out was like, you're going to finance how much for how many years? And it was just like, and of course they do their little sales job on what the power's going to increase to and all of that. But I just kept thinking about, you're going to pay interest on that money for how many years, and then it's going to be attached to your house, and you don't know how many years you're going to stay before you sell. And I was just curious if you had kind of, life experience on whether or not it was an asset or a liability to the resale value of a house.
The one thing that I found out in my studies was that also you must be careful about looking at the age of your roof, because if it's an older roof, they basically have to come in to take it off if you have to replace your roof, of course at a fee, and then they will put it back at a fee. So if you don't have a new roof to put it on, it's another big consideration before you go down there.
Tesla, we bought our house on seller financing. We got a great deal, used all of our skills that we picked up in real estate investing to buy our dream home. And we live in a beautiful 6,000 square foot, beautiful home that can give us some room to grow, and we can fix it up, but it's beautiful as it is. And got it a screaming deal, right? It's almost 15 years old, and it's got a 20-year roof on it. So solar is something that I personally want to do for just for my own personal belief system, as well as I think it's a good investment in the future. One of the things I'm looking into is Tesla makes what's called a solar roof. They're shingles that are solar panels. And so I'm just going to wait until it's time to redo my roof, and I'm going to do a solar roof. And then rather than pay for a roof and solar, it's kind of one thing, right? So it may be a little more expensive than doing just the roof, but it's going to be less expensive than doing both separately. So,
right. Absolutely.
That's going to be one thing. Now, Charlotte, to directly answer your question, there are a lot of factors to look at. Yes, does power go up over time? Absolutely. It's just like anything else. Inflation plays a role on the cost of energy. Supply and demand for the things that create the energy. In a lot of places, that's coal and gas. Supply and demand plays a factor on what the cost of power is. So will power go up over time? Yes. I would look at it as an immediate thing. Just like I look at a real estate deal. Am I going to count on appreciation on a fix and flip? No, I'm not going to count on. If it happens, which it happens all the time for me, I'm grateful. It's a great blessing, right? But I'm not going to count on it. is it something that makes sense financially right now? Now, there's other factors. It's going to vary person to person. Are there other reasons they're doing solar? Right? Is it a personal thing? Are they doing solar for moral reasons? Right? So that comes into play as well. What's the cost of that? What's the cost of, well, I feel better about having solar than, coming off the grid that's burning coal down the street. Okay, what are you willing to pay for that difference, and taking a look at that? But again, it's just going to come down to the numbers. If they look at their current bill versus the cost of what they're going to pay on a monthly basis, and the first thing I would look at personally is my monthly bill. Is it going to cost me less to have solar than it is to just pull off the grid? That's going to be the first thing I look at, is cash flow. If the cash flow makes sense, do it. If it doesn't make sense, evaluate your other reasons you want to do it, right? And decide what those are worth. Hopefully that answers your question.
I was also going to say, it's kind of like us talking about the political thing. It's hard to find the truth in what you're really going to save on the solar. I'm very energy conscious too, but ultimately I kind of look at it like real estate, where when someone gives you the sales pitch on the solar, you've got to say, okay, you're saying my bill's going to go here, my bill's going to go there, but what I want to do is I want to get the comparables, right? I want to reach out to those people that have the same sized house, same situation, maybe the same bills, and find out realistically how much they are saving on their solar bill. And that's going to be relative to what state you're in and what part of the state you're in and how much sunshine you get. And as Mitch was saying earlier, how things tie back into the electric company and all the details and the tax incentives you get both federally and state-wise as well.
Yeah, absolutely. No, that's, if we looked at everything in life as an investment, I think people would be making a lot better financial decisions, right? I talk about this with cars. We've all heard that buying a car cash is the best way to buy a car, right? But what's the substance behind that? If you look at it as an investment, if I'm paying 20 grand for a car, I know in 5 years it's going to be worth 10 grand. Is that a good investment? No, we wouldn't do that if it was real estate, right? We wouldn't do that from an investor standpoint. So why would we do that with a car? I've shared strategies about how to, go buy a $20,000 car or a $100,000 car or $1 million car by using real estate as the mechanism to purchase that car. We've gotten into that before. Look at it as an investment. Do the numbers shake out? That's the first way I look at it. And then, so well put, Dan. Thank you. Good questions. All righty. Well, let's keep having this conversation. What else is running through you guys' mind? Is there anything else that has been triggered because of this conversation?
No, I had another conversation.
Make a comment.
Yeah, Eugene, go ahead.
Eugene, go ahead.
Quick question: if you find a listed property, and you are wanting to sort of pursue seller finance, are you forced to go through the seller broker or agent in order to have that conversation with the owner?
The seller is forced to. So yes.
Okay.
Just because the seller has signed a contract called a seller broker agreement, yes. Okay. They're forced to, therefore you're forced to, right? So,
okay.
Now, does that eliminate the conversation? Absolutely not. In a lot of cases, you'll have to educate the agent on what you're talking about. And I find a lot of times that's done better in person than it is over the phone. But you know what? I've had to explain seller financing over the phone plenty. So it can be done. Usually the way that I approach that. Now, is this somebody that's offering seller financing, or is this somebody that is just kind of listing their house as a retail thing? You see it as an opportunity?
No, it's an opportunity because what's come up, it's a legal two family, And I'm not sure whether it's the seller or, well, I suspect it must be the seller because it's actually been taken down all the way to the studs inside. So a lot of the demolition work has already been done. What I don't know is whether it's legal to sell them as two separate, like tax entities or two separate units, or whether they have to remain as two legals. But I mean, that's a secondary question. But again, it's more the opportunity of negotiating seller financing with this individual who's trying to sell this property.
Yeah. The easiest way to tell is the tax IDs. And you know what? Because they have an agent, that makes it really easy. Ask the agent. They'll do the homework for you. Say, hey, I'm interested in this property. You know, I'm an investor, so I'm looking at this a little bit different than, and if they're selling it as a duplex, then, you know, and if it's stripped down to the bare bones, they're probably marketing to investors anyway. So they're going to be ready for the investor questions. And you can just ask the agent, hey, is this one tax ID or two tax IDs?
Okay.
And they'll be able to let you know. So now that's only going to be important if you're looking at selling it as two separate units from a tax perspective. In other words, selling one unit separately from the other unit, right?
Right.
If it's a conforming duplex, and that's another question to ask, is this a conforming duplex? Meaning, does the zoning permit a duplex to be on this property? That's another question to ask the agent. Is it a conforming duplex? If it's a conforming duplex, but it's under one tax ID, that means that you can sell it as a duplex when you turn around to sell it, but it's only one tax ID. So you can't sell the units individually as condos.
Individually.
You have to sell them both together as a package.
As a package, yeah, okay.
Now, with that said, you can go to the city and you know, petition to have it separated into two tax IDs so you can sell them as condos. So even though it's not now, doesn't mean you can't make it that way if that's the way that you want to do the deal.
Exactly.
It's just going to take a little bit of legwork, right? Was that the right answer to the question?
Absolutely. Okay, yeah.
Good.
Thank you.
I want to make sure I understood the question correctly.
Yeah. No, great.
Tyson, you had a comment. You want to come back out?
Yeah, I was going to share my Ford Raptor plan, my Ford Raptor plan with everybody. Just because we're talking about vehicles from the investment standpoint and real estate. So I'm in the deal, a fix and flip with Mitch right now. And my portion of the profit will be a good chunk that I can use to dump into another investment, right? So my plan is I'm going to keep trading up and dump all of my profit into a bigger and more profitable investment until I can buy an apartment complex. And the cash flow from that apartment complex is going to pay for my Ford Raptor. So I'm going to get a brand new Ford Raptor for free. That's my plan.
I love it. I love it. I did that with my dream car several years ago, about 4 years ago. I bought my dream car, and I did it using real estate. So, you know, I invested, I'd saved up the cash for the cost of the car. I used that to buy a seller finance property, and then I financed the car and used the cash flow from the property to pay the payment on the car, and ended up getting the car for free. So not a bad way to do it. I applaud the strategy. Love it.
Yeah, just a short update. I've got two units that, my residence where I'm living in, and then one of my investments. So I've reached out to financial institutions to see if I can get HELOCs, first position HELOCs. And so that conversation has started. So that will continue tomorrow, I'm sure. So, but that's pretty interesting.
Good. I know Charlotte's working on that too. Any advice for Eugene, Charlotte?
Well, as far as I know, that I have found they'll only do it on your primary residence. So I didn't understand that before. And so now we're kind of strategizing how to pay down the mortgage on our primary so we can increase the line. So we have other properties. And so if we're able to kind of change the balance of where the mortgages lie, then the less amount that we owe on our primary residence means the more money we can hold in a line as opposed to a mortgage. If does that make sense?
Are you doing a first position HELOC? Yeah. But are you doing a first position HELOC?
No, not on ours because we still had a mortgage left. So we have another house that's not our primary residence that is free and clear. So that would be the only way to do the first position HELOC that I understand. So are you trying to change your mortgage into a first position?
Yes,
okay.
I am. Yeah.
So I didn't attempt to do that. I did try that on a commercial property, and the bank kind of just like we've never heard of that before, and they have all sorts of, tradition that they don't really, their brains really couldn't go to allowing me to switch my mortgage, because it's a pretty big mortgage, on my commercial property to a first position. They call it a C block for commercial property. Yeah. So I tried that with that one, but I wasn't successful. And, but I did get them to, they wouldn't do that. And so I had actually I have 3 buildings that are commercial, and one of them is a residential property. So I had them combine or move that mortgage into the large property. So now I just have one mortgage on my commercial property, and I have 2 buildings. One's a residential house and one's a business location that are both free and clear. So my next step is to figure out how to use those properties to get more cash to invest. Okay. And so, since it's still owned by it's owned by our nonprofit, I don't know how to do that yet, because I haven't figured out like the rules around them loaning money on residential properties for a nonprofit. But I'm still, I mean, it may take me selling it to, a family member so that I can get that money. I don't know how it would work.
Because some of that can be done, Charlotte, with just, remember, we had Whitney on last week, and she talked about how she doesn't necessarily like quick claim deeds, but there are occasions when they're good to be used. For financing purposes, I've moved title before using a quick claim deed. I've moved title from myself to my credit partner and then back into my entity, just simply for the purpose of getting financing. So that might be a scenario where a quick claim deed and a title company, may be useful. If you're having a hard time getting it done because of the way that you're structured, move it out of the structure for a second and then move it back in, right? So that may be an option. But and actually, one of the reasons I called Charlotte out was because she's kind of doing a similar thing. So Eugene, remember, a HELOC stands for home equity line of credit, home, which is your home, right? Correct, so HELOC is going to be a product that you'd use for your personal residence. Pretty much the same product, just with a different name, is a collateralized business line of credit.
C block,
use C block. You can use that collateralized business line of credit. You can use your real estate as the collateral for that line of credit. So that's an option for you. If the pieces of property that you're trying to leverage for this line of credit are not your personal residence, then make sure that you ask for a collateralized business line of credit.
For sure. Yeah. As I say, we started the process today. So obviously with COVID and, not a lot of the staff are in. So it's, we'll get back to you. So as I say, we'll pick up the conversation. And again, so the one I'm reaching out to our local banks here. And then the other one is I've already spoken to Chase now. They just said they've put a freeze on that, so they're not even looking at HELOCs for the next few months. I guess most likely waiting for the election. But I spoke with a key one bank, I think that came up in one of our conversations. Yeah. And they were quite willing. So the rate was something I just sort of needed to get a little bit more comfort on, whether that's sort of in the normal range, but they were more than willing to go already to the next steps in the day one conversation. So that was at least promising.
Yeah. Good. And that's, that's a principle we talk about, is just because one
Sure.
bank won't do it doesn't mean another bank won't do it either, right? So
Exactly.
you want to talk to multiple banks. Chase isn't doing HELOCs at all right now, and Key is like, yeah, come on in, let's do it, right? So
Exactly. Yeah.
So yeah, don't stop with one bank. I tend to think that smaller local banks also are very good resources, because in the one branch, two branch banks, a lot of times when you're talking to the loan officer, you're also talking to the underwriter. So
Exactly.
you can get a little bit more done in that case, right? So, but no, let me know. Coach Dan and I are here to
Yeah, absolutely. I
with,
think I definitely will reach out,
Yeah.
if we get closer to at least something a bit more solid. But thanks, appreciate it.
Absolutely. Good question. All right. Anybody else? We're at the top of the hour. You guys ready to go watch the election results? This is like, I get political once every 4 years, right? Yeah. Dyson.
Okay. It's actually two questions. Have you ever found a seller finance deal that is not a deal based on numbers? So that's my first question.
Oh, yeah. Absolutely. Okay. What's the second question?
And then my second question. Yeah. Second question is, do you shy away from seller finance deals that have a prepayment penalty, and why?
So it's going to be subjective. I'll answer the second question first. Do I shy away from seller finance deals that have a prepayment penalty on the underlying mortgage? It's going to be subjective to what I want to do with the property. If the prepayment penalty is up in 3 years and I know I want to hold it for 5, I'm a little more likely to kind of ignore that. Now, if the prepayment penalty is for 10 years and I want to hold it for 5, then yeah, that's probably a deal killer. So it's subjective to the property and what the penalties are. If the penalty is really small, if it's like 0.5%, and I know like, hey, I'm going to be making like 30% on this deal, so yeah, worth it, right? I make 29.5% instead. So a lot has to do with just the subjective nature of real estate and whether or not it pencils out. Doing the math is the best way to tell whether it's going to be a deal or not. Have I passed on seller finance deals because of numbers? Yeah, absolutely. I've told the story before of the guy who wanted 244. I want 244. Well, your house is only worth, 205, sir. So, I don't know what you want from me. But seller financing gives me more factors to kind of massage than a cash offer does. With cash, it's a number. That's it. We're dealing with cash. But with seller financing, well, we've got the purchase price, and we've got the the interest rate, and we've got the amount of years that we're amortizing it with. And what's important for me on a seller finance deal that I'm turning into a rental, the most important thing is the payment, because I want that payment to be where, in a spot where I can make some cash flow after I rent it out. So sure, I can give him his 244 and I can adjust my terms and my interest rate to make the payment exactly what I want it to be. He gets his number, I get my number, and we're all happy, right? And we massage the ones we don't care about. So it was like a 40-year amortization that we did on that deal, and instead of a 30-year, which made the payment smaller, it stretched it out longer, but I wasn't planning on holding it for 40 years anyway. So those types of factors always play in. But at the end of the day, it's going to be, we'll propose the numbers that we want, and will the seller accept it? And they may counter offer with something, and we run the math again, and no, it won't work, but we could come up a little bit and back and forth, and eventually wherever they end up, standing still, does it work or not? And it's just a numbers game. So yeah, I've passed on seller finance deals plenty, mostly because they want too much down. I don't like putting a ton of money down, but you find that more with people who understand. Sellers who understand seller financing are always going to position the seller financing to benefit them more than you, right? And seller financing can benefit them more. They get cash and they get interest, and the amortization from the mortgage and all those things. It can be a real positive thing. I've used seller finance to my advantage when I've sold before. So just because it's seller finance doesn't mean it's an automatic winner. Where I find that seller financing does the most good is with motivated sellers, with people who are in some kind of distress where we can get a win because we're helping them out of a bad situation, and seller financing is part of that deal. Like for example, someone who's behind on their mortgage, a cash offer is going to help them, right? Stops the foreclosure, but it doesn't necessarily help repair their credit. Whereas a seller finance deal, me making those payments on time every month is going to help them repair their credit. So it's even more of a positive than if I give them a cash offer and I just pitch it that way. The biggest secret to real estate investing is helping other people. Well, like we said, you kind of have to be a showman with this stuff. Point out how this is going to help them, right? You're trying to help them. Point it out. This is going to help you, and this is how it's going to help you. Well, what if you did a cash offer? Well, it'll help you, but not as much as a seller finance, and this is why. So just comes down to numbers every time, and every deal is different, right? So you got to run the numbers on every deal.
And I asked because, by the way, I'm back. I voted.
Hey, nice. You voted. I love it.
There's Utah women voted.
Perfect.
And I'm not a woman, but
good to know.
Yeah, just in case anyone was questioning that, I'm not a woman, but I am celebrating the fact that women can vote. That's pretty awesome.
That's an old one, but yeah, that's true. I love it.
Yeah. So, anyways, I'm asking because I'm working on a seller finance deal right now, not finalized, but it's looking like it's going to be 5-year prepayment penalty, 7% interest, $30,000 down. So hope it works.
That's that 30,000. That's one that I would look closer at for sure.
Yeah, I am.
Pencil it out.
Big chunk.
Yeah, pencil it out. That's that's one that I would go after. And it comes down to cash flow, right? Cash flow's got to work.
Yep. It looks like it's going to work as a short-term rental for sure. A long-term rental, yes, is looking like I'd make about $300 to $400 a month. So that's about in my acceptable range. So I would get it and I would do short-term rentals on both sides. And if that ever goes bad for some reason, I can just switch to long-term rentals. But using Lauren Havens, you guys know her. I'll have her manage it for me. So I can she has a 95% occupancy rate average across all of her properties throughout the entire COVID-19 period.
Yeah.
That's pretty awesome.
Oh, that is.
Do you guys
awesome.
recognize Lauren's name? She's the one that taught the air cash flow class. So air cash flow management. Yep. She's awesome. We'll have to have her on these days. In fact, help me remember that. Let's invite her. Dane's next week, but let's invite her to come on and talk to us about air cash flow and how she's making it work during this COVID time, because I'm impressed. 95% occupancy rate. That's awesome.
A 95% occupancy rate is like 1 or 2 days per month does not have a tenant inside the property.
Incredible.
And she's actually set up so she can manage across the nation right now. She has systems set up. So she's an example that you guys could use her for managing your short-term rental property if you want.
I love it.
She'll make you more money than you'll make yourself.
I love it. We'll get her on the call for sure. Well, good. Any other questions?
Mitch, what about
so.
the general question? You and I have discussed this before, but it's just having the students learn your take on things. When you look at a deal, what determines, you just said a moment ago, hey, if they're really motivated, then I'm interested in seller financing, and that could be a long-term rental, right? But if someone, is selling their property and it's a good deal, why wouldn't you rent it out? Or why wouldn't you, what determines for you either doing the fix and flip or doing the rental? That's the general question.
Well, this is different for everybody, right? Because everybody has different goals. For me, rentals are my primary goal. However, I'm not going to pay cash for a rental because it's a terrible ROI, right? If I put $300,000 into a property cash, and I'm making $1,000 a month, maybe a little, let's call it 15 grand a year. That's 5%. That's a 5% ROI. I can get that in the stock market. Like I can get that in mutual funds, right? So why am I investing in real estate? It's not helping me. beyond what I'm, commercially able to get. So I like anytime for me, for my personal situation, it may be different for those of you out there, but for my personal situation, because I'm intensely doing rentals, I'm intensely doing flips as my secondary strategy. Kind of a basic rule is if I have to make a cash offer, it's a flip. I don't want my cash deployed for too long. If I can get a seller finance offer in, it's going to be a rental first. And the only way it's not going to be a rental is if the cash flow doesn't work out, then I'll do a seller finance flip, hold it for 4 to 6 months, turn around and sell it, cash out the sellers, right? So as a general rule, for me, seller finance means rental and cash means flip. Just kind of as a general rule. Now, I know there are some of you on this call that are like, I don't want to do rentals or I don't want to do flips. Fine, they're all rentals or they're all flips, whatever the case might be. That's just personal to me, and you have to make those decisions for yourself as you get more educated. What's important to you and what's gonna push you one way or the other on those types of things. That just happens to be mine.
Okay, great. How about another question, which is, you've talked several times about picking up properties, whether they're commercial or in other ways. You come across a landlord that already has a rental and the numbers aren't working for him, whether he or she that runs it is running it into the ground because they're trying to manage it themselves. And so you step in and say, hey, let's work out a plan here, and ultimately we'll do this subject to. But the point is that how do you structure that from a general sense, where if you're going to take it over subject to put a property manager in there and make it cash flow, how is there enough room for you to benefit from it, but at the same time give a benefit to the old owner if you're going to keep them involved?
Yeah. So one of the things that I leverage, and keep in mind, a lot of times, I talk about this as kind of a general warning in the off-market deals on tap class. You're always going to get more no's than yeses. So keeping that in mind, that you're going to go out and you're going to find a whole bunch of owner manager properties on the evictions list, and you're going to dial all of them and you're going to get more no's than yeses. That's just how it is. But how do we turn some of those soft no's into yeses, right? So one of the tricks, down payment. Remind them that they're getting, okay, so I'm going to give you 30 grand down. How long will it take you at your current cash flow to make 30 grand? Oh, well, let me do the math. 6 years, right? So, okay, so I'm giving you 6 years worth of cash flow up front, and then I'm going to continue to share the cash flow with you, albeit a smaller cash flow. But guess what? You don't have any responsibility on the property anymore. You're making the cash flow. You don't have to manage it. You don't have to maintain it. You're not the owner, so you're not responsible for anything. You're just the bank, right? So pitching it that way, they're like, okay, you're giving me 6 years of cash flow up front. Next month, I'm going to still get cash flow on this property. Yeah, it's going to be smaller, but I don't have to worry about it anymore. I can sleep at night and not have to worry about this thing and just check my mailbox once a month. Like, those are all things that are benefits, right? And again, it comes back to creating the win. Those are all things that are benefits to the seller that you need to present to them so that they can weigh that as part of the consideration. There are on occasion, and this may be people, some of you on the call, there are people who for one reason or another are embarrassed or scared to bring up those points, right? I don't want to sound too, high pressure or whatever the case might be. We're not being high pressure. We're showing them an opportunity. If I told you that you get 6 years of cash flow up front, would you be excited about that? Right?
Absolutely.
So we're presenting an opportunity to these people. Don't be scared to show them the benefits of what you're offering, because it's our job to create a win, and not just create a win for them, because sometimes they don't understand the win. And if we don't explain it to them, then they may put themselves into a worse situation just simply by being uneducated. So it's our job to educate people on what that win is, and then present them with the win, and ultimately let them make an educated decision. But that works sometimes where we can turn a no into a yes, but ultimately it's always going to be more than 50% of them say no. It's just the way it is.
And so is that more, would you call those deals more seller financing, or would you call them more subject to? Because subject to, in a general sense, is more of, hey, they're going to walk away from this anyway. I'm just going to take over their payments and I'm switching the ownership to me, and they're out of the picture, but I've helped them out from the credit and foreclosure and so on. Any comment on that?
So the way that I look at it is seller financing is kind of this umbrella that a lot of different strategies fit underneath of, right? Subject to is a seller financing strategy, in my opinion. But true seller financing, and I think this is what you're referring to, Dan, true seller financing is when they own the property free and clear, and they're just willing to take payments over time for you to pay for that property plus interest, right? Which works out to be great for them if that meets their goals. Subject to is where we're seller financing the property, that they're being an intermediary, but there's an underlying mortgage and we're kind of taking over the responsibility for that mortgage. It works on both. It works on both. But again, when we have, the numbers tend to be a little bit more difficult when there is an underlying mortgage, especially, I think in any case, even someone who's behind on their mortgage, I've had times where I came in and presented the option to them and they were so excited. They're like, we're doing that, let's do this. And then I get in and I run the numbers and it's not gonna work for me. Like they just owe more and their payment's higher than what I can pay. And it's like, I'm sorry, dude. Like, I wish I could help you. Here's the name of an agent. Let's see if we can sell your house, right? And they're so disappointed because I got them all jazzed about the idea of seller financing, and then just the numbers didn't work. And that's happened multiple times. So having an underlying mortgage definitely affects the numbers a little bit more than if they don't. They can be more flexible, obviously. They could sell you a property for $1 a month for 1,000 years if they want to, or you could write a contract for whatever you want, right? When they own the property free and clear. So, but it does work on both.
Okay, good. Thank you.
You got it. Absolutely. Great questions. Thank you, Dan. That's
I have
awesome.
a question.
Yeah, Jen.
Yeah. So if you're trying to negotiate like a seller financing and you have to go through the agent, is it appropriate to ask if you can kind of have like a virtual call with the seller as well?
It is technically not appropriate.
Okay.
Now, I had an agent the other day, an agent that's representing me on a property I'm trying to sell right now. He knows that I know what I'm talking about when it comes to seller financing. And he knows that I know more than him. The agent that's representing me, I know more than him when it comes to seller financing. And I had, now we're just trying to sell this house retail, but he had an inquiry about seller financing and he was like, you know what, just talk to this dude. Like, he's not going to go around me. Just talk. He gets it way better than I do. So, there are times when it's appropriate. I would say handle that. If you want to talk to the seller, you got to handle that with kid gloves, because it is, when the seller has representation, it's because they don't want to deal with buyers, right? So it is a little bit taboo to ask that. Just be delicate about how you go about it. It's not illegal. It's not, I think it's unethical to go around the agent completely, but work through the agent and, try to communicate what you're trying to communicate through the agent. And if you get to a point where it's just not working, say, hey, look, I think what I have to offer this seller is really valuable, and I don't think that you and I are speaking the same language on it. How would you feel about maybe a 3-way call where you're there and you can moderate the call, but I get a chance to explain really what I'm talking about to the seller in person? Would you be open to that? And just handle it with kid gloves. And unless they were weird about it, I don't see why that would be a problem. Just approach it with confidence, but also approach it with propriety, right? Respect the fact that the agent's just trying to do their job.
Yeah. Sounds good. Thank you.
You got it. Absolutely. Well, we're getting close here. We may have time for one more question if you guys have them. And then let's all go watch the election results. Figure out if we're doing flips or rentals for the next 4 years.
Well, the market's high, so we should at least be thinking about rentals. Anyways.
I say that tongue in cheek, but
yeah.
I know it's probably on most of our minds. So any other last minute questions? Going
Not
once.
tonight.
Going twice. Eugene, did you have a question?
Nope.
Nope. We're good. Okay, guys.
Yep.
Let's go check out those election results. We'll be back next week. We're going to have Dane Clark on to talk to us about seller financing and private money. Dane is a student of mine, one of the first students I ever had. I think he was one of the third student that I ever had as a coach. He's become extremely successful in real estate, and he's done it in a path that was different from what he originally chose. He wanted to be a fix and flipper, right? He wanted to do what I was doing. He got 3 fix and flips in, and he said, you know what? Fixing and flipping is not for me. And I said, okay, well, tell me about the parts you enjoyed about it. He's like, I really enjoyed raising the money. And so we worked together to help him create a business where all he did was raise money and then lend that money to other real estate investors. The guy has become just a monster and a machine at what he does. And I'm excited for him to come on and talk to you guys next week. So make sure you're there. We'll be sending out a reminder text as usual. Go enjoy watching the election results come in. And guys, stay healthy, stay safe. I love you all, and we'll see you next week. See you later.
Cheers.
Bye, everyone.
Bye.